Hello everyone, welcome to JAIIB CAIIB Prep. In today's class, we'll discuss about unit number 12, payment and collection of checks and other negotiable instruments. So in this particular unit, we'll understand about different types of negotiable instrument, promissory note, bill of exchange, check, how payment of check is made, what are the duties of collecting bank, what is the liability of the paying bank, endorsement of check, crossing of check, uh, dishonor of checks, and we'll wind up the class by doing some practice questions. So let's begin today's class. So when a customer writes a check from their bank account, they are giving instructions to their bank to make a payment to someone. Now the banker has a legal duty to honor this check, but only when there is enough money in the customer's account and that balance is properly applicable. However, the bank must also make sure that the check is written properly and meets all legal conditions. Now, the law that deals with checks and other financial instruments is known as the Negotiable Instruments Act of 1881. So, this particular act defines negotiable instruments. In section 4, it defines promissory note, section 5, bill of exchange, and section 6, it defines the term check. And these instruments are called negotiable because they can easily be transferred from one person to another to receive the money. We'll start with promissory note because we'll cover section by section. So we'll start with section 4, then we'll understand bill of exchange, and then we'll move to check. So, a promissory note is a written promise by one person to pay a specific amount of money to another person. It is not a currency note or a bank note. According to Section 4 of the Negotiable Instrument Act, it must be signed by the person who is promising to pay, and the promise must be clear and unconditional. For example, if the note says, I promise to pay B 500 rupees, this is a valid promissory note. But if the note say I promise to pay B rupees 500 after I win a lottery, it is not a valid promissory note because the payment depends on a condition, and only statements that are clear promise to pay a fixed amount of money are considered promissory notes under the law. Now let's move on to bill of exchange. A bill of exchange is slightly different from a promissory note. Here, instead of a promise, bill of exchange is an order. It is a written document where one person orders the another person to pay a specific sum of money to a third party. According to section 5, this order must be unconditional and clearly written. For example, a businessman might order his customers to pay a certain amount directly to the supplier. That written instrument becomes a bill of exchange. Even if the payment is to be made after some days or on a future date, it is still valid as long as the event is expected to happen for sure. And the person who's making the bill is known as the drawer, and the person or bank directed to pay is known as the drawee. Now let's understand check, and will I'll make you familiar with the other terms like holder in due course, etc. So a check is basically a written order. It is a type of bill of exchange drawn on the bank. So it is basically a written order from the account holder to their bank asking it to pay a certain amount to a person. According to section 6 of the Negotiable Instrument Act, a check is a special type of bill of exchange. It must be made payable only on demand and must be drawn on a specific bank. A check can be given from a savings account or a current account, but not from a fixed deposit. The bank is legally required to honor the check if it has been properly drawn, there is sufficient balance, and uh, the balance is properly available. Check can also be issued in electronic form using computer or digital signature. This is called electronic check. And we have understand about truncated check in CTS. So truncated check means physical check is scanned and only the image is used for clearing without moving the actual paper. Now let us understand about drawer, drawee, holder in due course, etc. So in both checks and bill of exchange, the person who makes the instrument is called the drawer. This is the person who gives the instruction to pay. The person who's supposed to pay and the to pay the payment is called the drawing. For example, if Mr. A writes a check to Mr. B from his account in HDFC Bank, Mr. A is the drawer, HDFC Bank is the drawee, and Mr. B is the payee. So, who's a payee? Payee is the person who will receive the money. Payee is the person who receives the money. Holder, a holder is someone who has the check, bill, or promissory note in their name and has the legal right to receive the payment. Even if check is lost or destroyed, the person who originally held the instrument in their name remains the rightful owner and can claim the money. Holder in due course. A holder in due course is a person who received the check or instrument in good faith and he has given something in return, such as money or goods, and had no reason to suspect that the check was stolen, forged, or involved in fraud. This person is protected under the law and has a full right to claim the money from the instrument. Negotiation simply means transferring a check, bill of exchange, or promissory note to someone else so that they becomes the new holder. Payment of a check. When a bank receives a check for payment, it cannot and should not blindly pay it. And the bank has to follow certain things. The bank checks the branch on which the check is drawn. Normally, the checks should be presented at the branch where the account is held. However, with the core banking systems, checks can now be paid at any branch of the bank, not just the one where the account is located. Number two, date. Banks look at the date on the check. The date must be current, and if the check is dated more than 3 months, so it was dated 3 months earlier, it is considered stale. So the validity period is 3 months. Earlier, it used to be 6 months, but in 2012, it was reduced to 3 months. So it is considered stale and cannot be paid. If it is dated for future, it is called a post-dated check, and the bank cannot honor it before that date. This is because there may be a risk of the drawer cancelling it or other events like death or insolvency happening before the future date. Pay details. The bank check pay details. The check may be written in the name of one person, a joint person, say X and Y, or it can be written to either of the two persons, say X or Y. So either one can receive the payment when it says X or Y, or if it says X and Y, then both must be present to receive the payment. Sometimes the check is made payable to cash, which means anyone can present it. However, if it says X only, it must be paid to only to the that person X and not to anyone else. Order or bearer check. Now the bank has to look into whether the check is an order check or bearer check. An order check can only be paid to the person named on it or someone to whom they have endorsed it. The bank must check the identity of the person presenting it. If it is a bearer check, it can be paid to anyone who presents it at the counter. The bank usually takes signature of the presenter on the back of the check as the receipt. Amount in words versus figures. So, another important thing to check is that the amount written in numbers and in words matches. For example, if the check shows rupees 1000 in figures and 1000 in words, then it is fine. But if shows 1000 in figure and 100 in words, then the bank will return the check. As per the law, the amount would be taken as a final, but in practice, if there is any mismatch, the checks are returned. Crossed or not. So the bank also check whether the check is crossed or not. Cross checks cannot be paid in cash and must be deposited into a bank account. So this is a security feature, and we'll discuss about later. We will discuss all about types of crossing. The bank also has to check whether there is endorsement or not, and bank has to verify that endorsement. If the check has been signed on the back and passed on to another person, the bank checks if the endorsement is regular and proper. For alterations, if there is any alteration or correction on the check, like changing the name or amount, it becomes invalid unless the drawer signs next to the change to approve it. Any major change without the drawer signature will make the check void. Mutilation means the checks get torn or damaged. So if the check was accidentally torn by the account holder, they can sign it again to confirm it is still valid. If was torn by the bank can still honor it by writing on the back that they guarantee the check. Signature verification. So the bank check the signature of the drawer, and signature must match the bank's record. If the signature is forged, the bank must not pay the check because there is no valid mandate exists if the signature is forged, and we'll discuss it in detail in unit number 13. There's a plenty of case laws on it. Bank should check for stop payment instructions. So bank must also check if there are any stop payment instructions. So if the customer has told the bank to stop payment of a check, the bank must not honor it. In a joint account, any one holder can give stop payment instructions. But for partnership firms, companies, cancellation of such instructions must be made by all authorized person. So basically, one person can provide stop payment instruction, but to revoke it, uh, the instruction of all the partners or all the authorized persons is required. The bank will also check that the balance is sufficient. There is no court order, there is no attachment order, and bank has no notice of draws death, insolvency, or insanity. Payment in due course. So under the Negotiable Instrument Act, a bank is protected from liability only if it makes payment in due course, and this has been defined under section 10 of the Negotiable Instruments Act. Payment in due course means that the check is paid as per the clear instructions visible on the face of the check, in good faith, without negligence, and to someone who is in legal and lawful possession of the check. This protection is important for bankers because it prevents legal action against them if they have acted carefully and honestly. So apparent tenure means the visible and clear instructions of the check, such as date, name of the payee, amount returned, whether it is bearer or order check. So this is apparent tenure. When we say good faith and without negligence, so good faith means being honest, and without negligence means being careful and not careless. So if a deposit slip has the correct name of the customer, but the account number is wrong, and the bank credits the money without verifying the name and the number together, it is negligence. In such cases, even if the bank is honest, bank is acting in good faith, the protection will not apply because they did not act carefully. At last, the check must be paid to a person in possession of it, meaning someone who is holder in due course. This means that the check is being handed over to someone who received it lawfully and not found it or stole it. Bank also has to ensure that the person receiving the payment is entitled to get the money. There should be no reason for the bank to suspect that the person is not the true owner. Liability of paying bank. So according to section 31, a bank must honor a check if there is enough balance in the account and there is no reason to stop the payment. If the bank refuses without valid reason, it must compensate the customer. However, even if there is money, payment may not be allowed if that fund is not properly applicable. So what do we understand by properly applicable? For example, there are stop payment instructions, or the drawer is deceased, or there is garnishee order or attachment order, or the funds are earmarked for a specific purpose, or the balance is not clear. In that case, the funds are not properly applicable. The law also provides protection to the bank if uh, in certain cases like order checks, the bank is protected even if the endorsement is fake as long as it looks regular. For bearer checks, the bank can pay anyone who presents it, even if there are fake endorsements. Drafts get similar protection, and if a check is materially altered but it is not visible and the bank acts in good faith, it is protected under section 89. So in unit number 13, we will discuss about the protections of the paying bank. We will discuss about section 31, section 85, 89, 128. So we'll discuss in detail in Unit number 13. So we'll discuss about 85, 89, 128, 127 and 129. So these sections provide protection to the paying bank. Section 85 provides payment. Basically, if the endorsement is forged and it is uh, the bank acted in good faith, then the bank is protected. 82 provides for bearer check. 85 is for draft. 89 is for materially altered checks where there are no visible changes. So the changes cannot be detected by a naked eye. Duties of collecting bank, again we'll discuss it in detail in unit number 14, but for brief let's understand it here as well. So collecting bank is one that collects check and draft for its customer. If the bank collects a check for someone who is not the owner, the bank will be held liable. uh, because this is conversion, wrongfully dealing with someone else's property. And to avoid this, the bank must meet three conditions. Number one, bank collects only for the known customers with proper KYC. Secondly, the check must be crossed before it is received. And thirdly, the bank acted honestly and carefully. If these conditions are fulfilled, the bank is protected under Section 131. Endorsements of check. So endorsement means signing a check or any negotiable instrument by the person who has it, the maker or the holder, for the purpose of transferring it to someone else. This signature is usually made on the back of the check or sometimes on a separate slip of paper attached to it, which is called allowed. So endorsement, signing the instrument for transfer. Let's understand different types of endorsement. Blank endorsement. It means the person just sign on the back without writing anyone's name. This makes the check similar to the bearer check, so anyone who holds it can claim the money by just presenting it. Full endorsement is where the person signs and also writes the name of the person to whom it is being transferred. For example, pay to Rahul or order. Signed Amit. This means the check is now payable only to Rahul or someone Rahul further endorses it. A conditional endorsement. Here the endorser attaches a condition to the payment and the person can receive payment only if the condition is met. Restrictive endorsement limits the use of check. For example, if it say pay to Ramesh only, then only Ramesh can receive the money and the check cannot be further transferred. Facultative endorsement is when the endorser gives up certain rights like the right to get a notice if the check is dishonored. So even then the endorser remains liable if the check is not paid. Crossing of check. Crossing a check is a way to make it more secure. It tells the bank that the check must be paid only through a bank account and not in cash over the counter. This helps in keeping the record and avoid misuse. Now, Section 123 to Section 131 of the Negotiable Instrument Act deals with the crossing of check. So there are two main types of crossing. The first is general, second is special. So general crossing is where two parallel lines are drawn on the front of the check. Sometimes word like and company or not negotiable are also written between the lines. This means that the check can only be deposited in a bank account, not in cash directly. Second is spatial crossing. So spatial crossing is where the name of the particular bank is written across the check along with the two lines. This means that the check must be paid only to that specific bank. For example, if the check says State Bank of India, then only State Bank of India or its collection agents can collect it. Not negotiable crossing. So a not negotiable crossing does not stop the transfer of the check, but it removes spatial right of a holder in due course. This means the person receiving the check cannot get a better title than the person who gave it. Account pay crossing. Account pay crossing is not defined in the law, but it is widely used in practice. It is written as account pay or pays account only. So this instructs the collecting bank to credit the check only to the account of the named payee. As per RBI instructions, bank must follow this strictly. And even if a check has been issued, the holder can add a crossing. If it was not crossed earlier, the holder can cross it generally or specially. Also, the holder can write non-negotiable if they want to restrict its negotiability. Forged instruments. A forged instrument is one where someone has made changes or signed it falsely without the permission. This could include forging the draw signature, changing the name of the payee, altering the amount, or modifying the date. Such instructions are not valid and the law does not protect their use. If someone tries to cash a forged check, even if bank pays it by mistake, the payment is not considered legal, and if the signature is forged, the bank will not get the protection because there was no legal mandate, and the person who received the money must return it because forgery gives no legal title. The rightful owner of the check has the right to claim the money back. Fraud or forgery affects only those involved in the fraud. It does not affect a holder in due course who took the instrument in good faith or and sorry yeah, the holder in due course took the instruments in good faith and without knowing about the fraud. But if someone knowingly takes a check obtained by fraud, they also loses the right to recover their money. So when a bank receives a check for payment but the required conditions are not met, it has to dishonor or return the check. And the bank must mention what are the reasons of dishonor. So the common reasons why a check may be dishonored includes uh, there was not enough funds in the account, there was no prior arrangement with the bank, the amount exceeds the arrangement, there was a stop payment instruction by the drawer, or the account is closed. And in the modern CTS environment, other reasons may include like check presented in the wrong clearing zone, it required documents missing, the original check has not been received, there was a failure in digital verification, so on and so forth. Now, what happens when dishonor is due to insufficient fund? So, when a check is returned because of insufficient funds or exceeds arrangement, it is treated as a criminal offense under Section 138 of the Negotiable Instruments Act, provided three conditions are met. Number one, the check is presented within 3 months of its issue date. Number two, the payee, the person who received the check, sends a written notice to the drawer within 30 days of check return demanding payment, and the drawer fails to make the payment within 15 days of receiving the notice. So, if these three conditions are met, a person will be liable under Section 138 if the check has been dishonored due to insufficient funds or if it exceeds arrangement. If all this happens, so the drawer can be punished with imprisonment of up to 2 years or a fine up to twice the amount or both. There was some important case references. So in case of Bhupender Lima, the court held that the legal heir of the drawer cannot be held criminally responsible. In G. Venkataramaya case, it was held that even if a check is dishonored because the account was closed, it is still an offense under Section 138. In S. Bhadram, if a check can be presented, it says that a check can be presented multiple times during its validity. And in N. Sivalingam, the court held that for post-dated checks, the validity period is counted from the date mentioned on the check. Let's understand some legal provisions. Section 141, offenses by a company. So, if a check is bounced by a company, not only the company but also the persons responsible for running the account, like managing director, they are also considered guilty. However, government nominated directors are not held liable. Also, once a cause of action arises, the legal time starts ticking, and the presenting the check again does not start a new legal time. Section 143, summary trial. The offence under Section 138 is usually tried by judicial magistrate or metropolitan magistrate in a summary manner. The magistrate can impose a jail sentence of up to 1 year and a fine of up to 5,000 rupees. Summons may be sent via speed post or courier. So the magistrate may direct that the court summons to the accused or witness can be served using speed post or court approved courier services to speed up the process. Section 145, evidence by affidavit. So the complainant can submit their statement in the form of an affidavit. Affidavit is a written sworn statement. So this can be used in the trial unless there is a valid objection. Banks dishonor memos prima facie evidence. So when the bank returns a check, it gives a return memo with a stamp or mark stating the reason. In court, this memo is treated as proof that the check was dishonored unless the drawer proves otherwise. Section 147, offences are compoundable. So offences under Negotiable Instrument Act are compoundable, which means that both the parties can settle the matter outside the court and in the case with mutual consents. Section 148, appeal and deposits. So if the drawer files an appeal against conviction, the appellant court, the higher court may ask the drawer to deposit at least 20% of the fine or compensation order by the lower court before proceeding with the appeal. So now let's check your progress. Section 131 of the Negotiable Instrument Act extends protection to, now this section 131 extends protection to the collecting bank. So A is the correct answer in this question. Where a customer by a letter has advised the bank directing the banker not to honor or pay a particular check, such letter is called a stop payment letter. So B, stop payment letter is the correct answer. Forced check is an invalid check. This is not stale. Stale is when the time limit, the validity period expires. A check favoring Rajkumar or order is stolen. The thief endorsed the check as Rajkumar in his favor. The check is presented in clearing and paid by the draw bank. True owner later on sent legal notice to the bank. What is the liability of the bank? So here, uh, the paying bank will get protection under Negotiable Instrument Act, and hence option A is the correct answer. Section 131 of the Negotiable Instrument Act gives protection for collection of, it gives protection for collection of check. So D is the correct answer for this question. So let's move on to more practice questions now. Consider the following statement regarding the Negotiable Instrument Act 1881 and identify which of them are correct. Number 1, a check can be issued only from a demand deposit account. So this statement is actually correct. A promissory note must contain a conditional promise to pay a certain sum of money. It must contain unconditional promise and not conditional promise. It's not correct. A check in electronic form must be signed with digital or electronic signature. So this statement is correct. A truncated check involves replacing the physical movement of a check with its electronic image during the clearing cycle. So this statement is also correct. The statement I promise to pay B rupees 500 on D's death, provided D leaves me enough money to pay the sum, is a valid promissory note. No, this is not a valid promissory note. It comes with conditions. So this is not a valid promissory note. 1, 3 and 4. Option A is the correct answer for this question. Consider the following statements regarding negotiable instruments under Negotiable Instruments Act. A bill of exchange must contain an unconditional order to pay a certain sum of money. This statement is correct. The drawer is the person who is directed to pay the amount written in bill of exchange. The drawer is directed to pay, not the drawer. Drawer is the maker, so this statement is not correct. A holder is someone entitled in his own name to possess the instrument and receive the amount due. So this statement is correct. A holder in due course must have obtained the instrument for consideration and without any suspicion of defect in titles. This statement is also correct. Negotiation refers to transferring a negotiable instrument to make the transferee the holder. Again, this statement is also correct. So 1, 3, 4 and 5 are correct, making option C as the correct answer for this question. Identify which of the following statements are correct regarding the payment of checks by a banker. A check drawn on one branch of a bank can be paid at any other branch of the same bank even without CBS. So it is possible only because of CBS. So that's why the statement is not correct. A stale check may be paid at the discretion of the banker. The pay is well known to the bank. No, this is not correct. A check payable to X and Y must be paid both jointly. Yes, this is correct. If a check is mutilated and accidentally torn by the drawer, it can be paid if confirmed by the drawer and otherwise in order. So this statement is also correct. For cancellation of stop payment instruction in partnership account, all partners must approve. Yes, this statement is correct. A forged drawer signature makes the check void and the bank cannot debit the customer's account even if the forgery is not detected immediately. This statement is also correct. A bearer check with regular endorsement must have endorsement verification before payment. So this statement is not correct. A bearer check can be paid to any person presenting it. An endorsement need not to be verified. So this statement is actually not correct. So 3, 4, 5 and 6 are correct. So option B is the correct answer for this question. Okay, so here also it says only statement 3, 4, 5 and 6. So this should be 3, 4, 5, 6 and say 7. So option B is the correct answer for this question. Examine the following statement regarding payment in due course under section 10 of the Negotiable Instruments Act and identify which of them are correct. Payment in due course must be made in accordance with the apparent tenure of the instrument. Absolutely correct. A banker acting in good faith but with negligence is still protected. No, should be in good faith without negligence. Good faith and absence of negligence are both essential for protection to be available to the paying banker. Correct. Payment should be made to a person in possession under circumstances that do not raise doubt about his entitlements. This is also correct. Verifying only the depositor's name without checking the account number is sufficient to avoid negligence. So this is not correct. So 1, 3 and 4 are correct, making option C as the correct answer. Consider the following statements regarding the liability of the paying banker and the protection available under the Negotiable Instrument Act. A bank is always liable if it refuses to honor a check even when funds are frozen under garnishee order. So this is incorrect. A check crossed specially to more than one banker should not be paid by the paying bank. So this is not correct. A check crossed specifically to more than one banker must not be paid unless to an agent. So it says not be an agent. So unless to an agent for collection. So in that case, it can be paid. So that's why that this statement is actually correct. A check crossed specially to more than one banker should not be paid by the paying banker. Yes, this statement is correct. Under section 85 2, forced endorsement on a bearer check affects the paying banker's protection. Now this statement is incorrect. Why? Because forged endorsement on bearer checks do not affect the paying bankers, uh, since bearer checks can be transferred by mere delivery and hence it will not affect. So this statement is not correct. Second one was correct. Under CTS, material alterations on check are allowed if countersigned by the drawer. So under CTS, material alterations are not allowed even if countersigned. So this is not correct. The bank is protected under section 89 when a materially altered check does not appear to have been altered at the time of payment. This statement is correct. Under section 128, the paying banker is protected when a cross check is paid in due course to the correct banker. So this statement is correct. Hence, statement 2, 5 and 6 are correct, making B as the correct answer for this question. Yes. Consider the following statements regarding the protection available to a collecting banker under section 131 of the Negotiable Instrument Act. Statement 1, the check must be collected for a customer whose identity has been verified as per the KYC norm. Yes, absolutely correct. Statement 2, the banker is protected even if the check was not crossed at the time it was received, but the bank crosses it later. So, if the bank adds a crossing to an uncrossed check, protection is not available. Hence, statement 2 is not correct. The banker must act in good faith and without negligence while collecting the check. Yes, this statement is also correct. Hence, statement 1 and 3 are correct. Option A is the correct answer for this question. Consider the following statements regarding the legal implications and variations of endorsement under Negotiable Instrument Act. An endorsement in blank can be converted into an endorsement in full by the holder without signing his own name. So, this statement is uh, correct actually. A holder of an instrument endorsed in blank can convert it into endorsement in full writing. In a conditional endorsement, if the condition fails, the endorsee cannot claim the amount of the check. Yes, this is also correct. A restrictive endorsement always prevent the check from being further negotiated even with the consent of the endorser. So this is not correct. A restrictive endorsement may limit the negotiation but not always. So this is not correct. Facultative endorsement overrides the statutory requirement of notice of dishonor but does not absolve the endorser from liability. This statement is absolutely correct. Endorsement on an allowance is valid only when there is no space left on the back of the check. No, this statement is not correct. Endorsement on allowance is valid regardless of the availability of space. So 1, 2 and 4 are correct, making option C as the correct answer for this question. Consider the following statement regarding the crossing of checks. General crossing involves two parallel lines on the check and may include the words and company and not negotiability. So this statement is actually correct. A generally cross check can be paid to any person in possession of it. This is not correct. A generally cross check must be paid only to a banker. Specially crossing includes the name of specific banker on the face of the check. This is correct. Then a non-negotiable crossing restrict the transferee from getting a better title than that of transfer. This is also correct. The word account pay or pay account only are mandated by the Negotiable Instrument Act. No, these are not mandated by the Negotiable Instrument Act. A holder of uncrossed check can cross it either generally or specially. Yes, this is statement is correct. So statement 1 is correct, 2 is not correct, 3 correct, 4 correct and 6 correct. So 1, 3, 4 and 6. 1, 3, 4 and 6. Option A is the correct answer for this question. Examine the following statement regarding forged instrument and dishonor of check. A forged signature on a check rendered the instrument void, and even a holder in due course acquires no enforceable rights. This statement is correct. Payment made by a bank on a forged check is valid and binding on the drawer if made in good faith. This statement is not correct. Payment by a bank on a forged check is not valid even if in good faith. So this statement is not correct. Under section 138 of the Negotiable Instrument Act, criminal liability can still arise even if check is presented multiple times during its validity and dishonored each time. This statement is correct. If a check is dishonored due to a technical failure in digital certification validation under CTS, it automatically constitutes an offense under section 138. This statement is not correct. The legal representatives of a deceased drawer can be prosecuted under section 138 if a dishonored check was issued before the drawer's death. So this statement is also incorrect. 1 and 3 are the correct statements. So option B is the correct answer for this question. Consider the following statement regarding the provisions under the Negotiable Instrument Act related to check dishonor and trial procedures. If a company commits an offence under section 138, only the company is held liable, not the individual responsible for its conduct. This statement is not correct. A director nominated by the central or state government is not liable for prosecution under section 141. This statement is correct. Under section 143, in a summary trial for check dishonor, the maximum imprisonment can be up to 1 year. This statement is also correct. As per section 145, evidence of the complainant can be presented through an affidavit. Yes, it can. So this statement is also correct. Once a check is dishonored, presenting it again restarts the limitation period. No, this never happens. So this is not correct. 2, 3 and 4 are correct. Option B is the correct answer for this question. This is it for today's class. If you have any doubts, don't hesitate to ask us on our Telegram group channel, JAIIB CAIIB Prep. Thank you for watching the session. We'll meet again soon with unit number 13. Till then, please take care and bye bye.